Markets are coming off a powerful multi-year run, but the big question for investors now is whether 2026 brings more upside or a much-needed reset. For more, we're bringing in now Mark Newton, Managing Director and Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, my friend, always great to see you. So what to expect in 2026? Choppy, you say, Mark. Possible 15 to 20% drawdown before we do finish the year higher. Now that's interesting. Maybe start there. If I'm a viewer, Mark, or I'm listening to that, I'm wondering what's the signal, Mark, or signals that would suggest that kind of drawdown, that kind of decline is on the way, and what would be the signal, Mark, that would tell me it's complete?
Thanks, Josh, and Happy New Year to you and all. Look, I think it's important to differentiate between the short-term prognosis and really what I see for the course of the year. I am positive for this year. I have an S&P target of 7,300, but I do expect it's going to be a year of consolidation and choppiness. And I think a lot of that is going to stem from technology starting to show some evidence of consolidation after really a phenomenal 3-year run. We have seen a lot of these tech stocks get quite overbought in the near term. Many might realize that stocks like NVIDIA, of course, are really a shell of what they were in recent years. We've gone almost sideways since the month of July, and many, might see obviously other parts of software like Microsoft. Software has been under pressure almost for 6 months. It's been really a difficult area within technology. So, I think when the Palantirs and the Microsofts and the NVIDIAs of the world start to show some evidence of pulling back, that would be a sign that the stock market likely would begin some consolidation. Now, I do think that is premature for now. I honestly am quite bullish with what's been happening over the first few days of this year. We're seeing breakouts, not only of the Dow Jones Transportation Index average over the highest levels we've seen from 2021 and 2024 to new all-time highs. That's happened in the Dow Jones Industrial Average. It's happened in the eco-weighted S&P, mid-caps. S&P, of course, notched its own all-time high the other day. So right now we've seen, after about 6 months of breadth really waning a bit, that's starting to show evidence of coming back. We're seeing evidence of, industrials starting to climb again, financials, discretionary. Those are all very good signs. Sentiment, however, is starting to recognize that markets are, pushing higher to begin the year, and that's also starting to climb. So that's going to be the one thing that investors really want to pay close attention to, is when sentiment starts to show more evidence of being frothy. For right now, the economy arguably is still in pretty good shape. We saw the labor market data today, quits rate going up, dropouts, layoff rates going down. Tough to say that that's a sign of a deteriorating labor market. Earnings have been in great shape, and breadth now is starting to climb. So in the near term, and by near, I say probably the next 6 to 8 weeks, I actually expect a pretty decent stock market rally. Thereafter, I think it's going to start likely in the latter part of February, early March, where we're going to start to see some pressure in stocks that likely lasts down to May, and then a bounce, and then we probably have some third quarter weakness thereafter. I think stocks will be fine. So I'm not calling for the end of any sort of bull market per se. I think we're in a multi-year secular uptrend in AI, but I do think we need to consolidate what we've seen in recent years, and that process honestly has already started to happen with many of the often watched tech stocks that you and I talk about every day.
You mentioned, Mark, Microsoft and NVIDIA there. You also do call out Apple and Tesla. What do the charts indicate with those names, Mark?
Well, both of them have been weakening of late, which is unusual because S&P hit new all-time highs, but yet, Apple and Tesla have both been pulling back in recent weeks. I actually like owning both of these. Many investors might realize that the QQQ has not pushed back to new all-time highs, but is right now within a symmetrical triangle formation, as we technicians like to say. That is on the verge of a decent breakout, in my view. It should be resolved by a move back to the upside, which likely carries technology higher even still. So I think the tech is going to sort of reassert its leadership probably for about a month or two max. And we see a decent push up in technology, meaning Apple and Tesla bottom, start to turn higher, to sort of join this move that we're seeing obviously in the data storage stocks. The Seagates and the Western Digits of the world, Micron, have been incredible. But, you have to be a little bit more selective in tech. Palantir has gone nowhere in about 6 months. And so you have to really understand what you're owning and what part of the cycle that we're in.
You also sound like you're constructive here on commodities, Mark. oil and gold, but expect some near-term pullbacks there?
The precious metals I like a lot. I don't think they're going to pull back necessarily. My concern is really about oil. And I think that between now and the middle part of February, we are going to get sort of a final move down towards new lows. And that should mark a pretty decent buying opportunity. I am expecting energy can outperform this year. You know, it's been a huge supply imbalance in recent months and really a lack of global demand. That should start to change. I do not believe in the saying of peak oil. You know, I heard from the IEA, you know, that likely they've completely reversed their stance. We know that, you know, fossil fuel demand is necessary for AI. So I think that oil is going to be just fine. Actually, I think for value pickers, you know, this year, you know, it's going to be an interesting area to look to really buy dips, I think, in the next couple of months, because energy should be in the process of slowly but surely bottoming out. Precious metals, on the other hand, you know, have gotten very, very extended, but still look phenomenal technically. I think the majority of their move this year will be made in the first 2 quarters of this year. I see gold getting to 5,000. Silver could get to 90. But both are very extended and certainly in the latter stages of their own intermediate term cycles. As interest rates start to gradually pick up, which I think starts in the spring, that likely is going to cause the precious metals to finally start to pull back.
Mark, great to see you as always. Thank you, sir.
Thanks, Josh.